In this video, we're going to answer the age-old question of should you withdraw trading profits or not? Stay tuned. Hey traders, a very warm welcome to you. So this is an interesting one, all right? And I think there's a distinct different people in each camp. I'm going to leave you my thoughts on it and stick yours in the comment section below if you would be so kind. Okay, so withdrawing trading profits, yes or no? I am a big advocate of withdrawing trading profits, and let me explain. I'm also going to look a little bit further about how much I think you should have in your trading account to trade with. Now, I believe there's a lot of people who say, hey, listen, I want to put in all the money I'm prepared to risk in the market. So if they're risking £100,000, for example, they've got it all in the market, even if they're only trading at a small size or they're trading small amounts. They've got it all in their broker account because that's their risk for trading, whatever it may be. You've got other people who say, listen, I just want to use a little bit in, I want to put a little bit in my account, I want to keep some back. Now, I am a believer, and I'm going to give you some stories and stuff as to why I believe this to be the case. You should only have in your account the minimum you need to operate your trading plan plus a cushion. And let me explain why. Number one, you've got broker risk. Now, if you're selecting a good broker like the ones that we recommend, they're going to be all approved. They've got a lot of backing, a lot of financial backing. If anything goes wrong, you will get your money back. However, you know, there are times when things go wrong with unregulated brokers, fraud, this, that, and the other. Or even if something goes wrong with a regulated broker, the time still takes to get back your money from the government if you're under FCA protection or whatever jurisdiction you're looking at, it could be a problem for you. So there is that slim broker risk, but really it's a small part of it. I want to mention it, but it's not that big a thing. The other things I think are more interesting are temptation and value. I couldn't really find a good phrase for that, but I'll explain what I mean by that. So temptation is, hey, listen, if I've got £100,000 in my account, but in my trading plan says, hey, I only want to trade £25 a point, and I'm trading the DAX, swing trading the DAX, that's all I'm trading. You've got so much buying power there. The temptation is there for you to increase your position size. Now, you may be someone who that doesn't temptation affect at all. For me, it was massive. For me, it is still massive. I want to trade as much size as I dare. And I know it's a weak spot. I have to pull back and say, listen, stick to the plan, stick to the plan. And one thing that stops you doing that is not having huge amounts of cash in your trading account that allows you to trade massive amounts of size. Now, I know that a lot of trading accounts allow you to trade a reasonable amount of margin, so you're still going to be able to have a lot of size, but it just kind of reminds you, as that reminder there says, listen, you know, my total risk on this isn't just in the broker account. I don't need that. I'm just using the capital I need as a tool to make the trades I need to make. And also the values perspective, guys. If you've got it in the account, very often I think people think, well, it's there to lose, it's there to use. And in reality, you don't need to. Listen, we live in an age now where we can deposit and withdraw instantly. We can definitely deposit instantly. Most of the time withdrawals 3 days, or if you pay for Express 1 day. But the point is you can get money into that account instantly with your debit card, whatever it may be. You can have that money there ready to use, ready to risk. So for me, knowing I've got that, knowing I can put that in when I need it makes the difference. I don't need to have it sitting there if it's not being used. And the value of it then, I think, in many people's eyes, the perception of it changes. If it's in the account, it's there to lose, so to speak, which is a dangerous thing, or it's there to be used. I've got to be using it. It's in there as opposed to just having the small amount in that you need to function with your trading business. Okay, so let's go and have a look at that aspect. So how do you work out this number? And how do you kind of prune profits back? And how do you also allow for the odd times when you're going to lose money and you're going to draw down the account? You don't really want to be putting money in all the time, but at the same time you don't have too much in. And you know, I've seen guys who have had, you know, 7 figures plus in accounts, you know, when companies have gone under, not in the UK, overseas. I'm not going to mention names of brokers, but you probably know which one it is, and struggled to get the money back. And they didn't really need that amount of money. Yes, they were swinging around a decent sized line, decent sized clips, but they probably didn't need that amount of money in there. Okay, so let's have a look at how much you should probably have in your account. Now, you should know with your trading plan, what's your max loss per month, per week. I'll put year here. If you're a swing trader, you know, you might have multiple positions, but you still might have an idea of how much you're prepared to lose in the year. If you don't, you probably should. But let's look from a kind of day trader or swinger trader's perspective, kind of maybe a shorter term swing trader. Max loss per month, max loss per week, the kind of thing. So you've got that figure in your mind, right? So that's the worst case scenario. So the next month on, you're down by, let's say £2,000, £1,000, £10,000, 500 quid. Whatever it is, the money doesn't matter. The point is you should have that figure as part of your broader trading plan. Then we look at 2, the max position size. So in other words, again, as part of the trading plan, this all comes from the trading plan, is what's my max position size? Okay, it's X pounds per point. I'm spread betting, it's X number of shares, it's X number of value of shares, it's this, it's that. You already have an idea of what you're going to trade. And so then we add that to the max number of positions. If you're someone who's trading once or just one trade at a time, that's pretty easy. If you're someone who says, you know what, I have 4 or 5 swing positions, maybe 6 or 7 at peak, you need to work to your max position sizes. Again, this should be in your trading plan. Hey, I want to take 3 trades at a time maximum, or if maybe I'm swinging longer term, that's going to be a bigger number. But now you start to see how much money you kind of need in your account. You can start to get a vision of what's going on and the margin required for those positions. So now we know the biggest size we're going to take under our trading plan, the number of positions in the portfolio at any one time, the margin required for those, and obviously it's going to depend on the instrument you're trading, but you need to know the maximum here. If you're trading stocks, maybe you're going to need to have a lot more margin in there for each of these. If you've got 3 or 4 positions, multiply by that, by your maximum position size. Okay, now I've got a number of what I need as a tool to kind of trade with, and obviously that's going to be less with trading stuff like currencies, indices, stuff with a low margin requirement. But some of the bigger stuff, this is all things you're going to be planning out. And then you need a small cushion. So you now have your working capital, if you like, how much you need to kind of do what you need to do, your max position size, the margin, all this stuff. There's a number there for you. Now you need to say, okay, what's my max loss per month? You adding that max loss per month onto that number. So you've got now this size amount of money, knowing that if you lose that, you've still got the tools needed towards the end of the month to play the game, even if you're in a max loss situation. And then a small cushion just in case kind of things change, margin requirements change, just enough. No point going right down to the wire. Give yourself a little bit of a buffer. And that point, and the reason you've got that then is you've got the tool. This, let's say this bit here is the tool needed, i.e. the amount of capital needed to use to trade the positions that you plan on trading. And then you add to that the loss, the maximum loss that you could have in that month. Now the point is, it adds so much value to you, this. So if you've made a good batch of money last month, take out everything except that. The tool you need, the amount of capital you need as a tool, and the max loss for the next month, because you know that's all you're going to need. If you stick to your trading plan, that is all you will need. If you lose and you lose your maximum amount of money, you'll lose every single thing of that, but you'll still have enough capital to trade with the last trade, as it were, and then you're done for the month if that's the case. If you don't and you make good money, then great. You know, you've still got the tool as capital. So this really is a kind of different way of looking at it. And I think this is a good way of looking at it. I know a lot of people that do it like this, and you can see the benefits. You don't have any more risk than you need to, counterparty risk. You don't have the temptation. Sure, you know, this figure's not going to be a small amount if you've got a lot of positions, and it might not eliminate that completely. But the point is, you know, adding that with the value that you're putting on it. If you've got all your money and you're accumulating profits, you know, you might be tempted to suddenly go in more size just because you've had a good 6 months or something. Whereas if you've got the same amount of money at the start of the month, each month, the only time you can increase the size, the only time you can start to push more chips in is when things are going good for you and you decide it in the trading plan. And then you reference that and say, hey, my position size has increased, number of positions has increased, you know, all that kind of stuff has increased. Let me put more in this month because I'm planning to do more with it. All right, guys, let me know your thoughts in that comment section below. Thumbs up if you like this kind of stuff. See you next one. Take care. Bye-bye.